talks going on. Scott Bessent is there and some others. Jameson is here. And, yeah, I think they're going fine.
U.S.-China talks in Spain head into a second day as diplomacy between the world's two biggest economies intensifies. Amid signs the trade war is bruising both. Live from Singapore, this is Inside with Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis. Chances of fresh stimulus for the Chinese economy are rising as activity slows more than expected for a second straight month with a sharp slump in investment. Meanwhile, global stocks hovering near record highs with investors focused on the Fed's upcoming meeting. Markets are betting on a series of rate cuts extending into next year. A Fed rate cut could give the PBOC room to ease policy, providing a further boost to mainland stocks. We'll discuss the economic and market implications with Professor Nancy Qian from the Kellogg School and Daniel Murray from ESG Asset Management. Plus, Nepal's new interim prime minister has called for calm and pledges to fight corruption after violent anti-graft protests rocked the South Asian nation. We hear from one of the richest men in the country on how he plans to contribute to rebuilding Nepal and winning back trust from young people disillusioned by corruption and unemployment. Watching trading across Asian markets today as investors brace for 36 hours of key central bank rate decisions later this week. The Federal Reserve is widely expected to cut rates on Wednesday, while the BOE and BOJ are also set to meet. Take a look at Chinese assets after activity data for August revealed weakness across the board. We saw misses in retail sales, industrial output and fixed asset investment. China is struggling to meet its economic goals this year amid a protracted property slump, consumer weakness, and trade tensions with the U.S. For more on the Chinese economy, let's bring in our Chief North Asia correspondent, Stephen Angle. And Steve, we're seeing further evidence of deceleration in China's economy. It does seem like the stimulus is running out of steam.
Yeah, so it begs the question, is more stimulus needed if they're going to hit that target of around 5% growth for GDP for this year? Remember, in the first half, it was 5.3%. So you're seeing sort of a deceleration from July to August. And so there's some worrying signs, obviously, as the export boom starts to peter out as well. So that's, you have to kind of look at domestic production and investment. And all the indicators pretty much were below the consensus estimates, and consumption is just lagging as well. Retail sales at just 3.4%, industrial production at 5.2%. That's the slowest gain since August of 24. And the real worrying number is the fixed asset urban investment number, a year-to-date number of growth of just 0.5%, the slowest pace since August 2020, really when the pandemic was taking hold in China. So again, there's some worrying signs, and the big question is how do they stem this slowdown with a very uncertain and risky external environment?
And of course, this coming against the backdrop of U.S. and Chinese officials resuming talks in Madrid this Monday. What more do we know? What do we expect?
Well, I think this is pretty much laying the groundwork for a potential meeting between Xi Jinping and Donald Trump, possibly within the next 6 weeks or so, because we have big events coming up in the Asia-Pacific with the ASEAN summit in late August, and then followed shortly thereafter by APEC in Korea. So I think the leaderships in both countries are testing the waters to see if they can find some common ground in those talks that happened overnight in Spain, in Madrid. They're going to resume again today for a second day. They talked for nearly 6 hours. They talked a lot about trade, a lot about national security. Those are difficult issues to find common ground and find deliverables for a leader meeting. So that's the tough part. So that's why maybe TikTok issue. Remember, the Trump administration has set a deadline of this week to find a U.S. buyer to resolve this, and otherwise it could potentially stop operations in the United States. This is what Donald Trump had to say about the TikTok issue and the discussions that Scott Bessent had with He Lifeng on the matter.
They're negotiating TikTok right now. We may let it die, or we may, I don't know, it depends, up to China. It doesn't matter too much. I'd like to do it for the kids. They like it. I mean, selfishly speaking, I did very well on TikTok, and I got the youth vote.
But it's good that they're talking. They might come up with some sort of agreed-upon solution that they can announce, obviously, at any kind of potential summit, if that does happen. Or it could go dark by the end of this week, or they could extend it again. Keep in mind as well, that current trade truce between China and the United States, it also expires November 10th.
Steve, thank you so much for that. Our Chief North Asia correspondent, Stephen Angle, in Hong Kong. Let's get more on the outlook for China with Daniel Murray, Deputy CIO and Global Head of Research at EFG Management, which oversees around $45 billion in assets. We're also joined by Nancy Qian, Professor at the Kellogg School of Management. Daniel, let's start with you. We heard from Steve a surprise slump in investment. We know also that the Chinese economy is undergoing the longest stretch of deflationary pressures in years, and yet here we are. HSI, CSI, both in positive territory. I mean, how are you reading reaction to the numbers we're seeing today?
So I think the economic data has been weak for a while in China, so I don't think it's massively a surprise to markets. And I think in terms of what's driving markets in China at the moment, first of all, there's just, there's some good companies that are internationally robust and that are more resilient than the domestic data would show you. But I think also there's a degree of optionality in the Chinese market just because it's been so unloved by the international investors for so long that actually there's a degree of asymmetry there in terms of the return profile. So I think that's sort of part of what's going on at the moment.
So, Nancy, Daniel says no surprise to the market, but it is a deceleration. It begs the question, what really is the potential, the real potential of China's growth? Some say closer to 2.5 rather than 5.
So I think China has the potential to grow. Exactly what number, we're not going to know. So earlier, there was a discussion, a comment about how the stimulus package isn't working as much as we think it is. I think that, to me, is no surprise. Stimulus packages work really well when economies face transitory shocks. They're what governments do to help the economies tide things over. China is facing a fundamental headwinds. There are fundamental difficulties. They're not just transitory. China's main problem is its huge economic size. It can't just keep exporting its way the way that the Asian tigers did in the 1980s and 1990s. At this point, the more it exports, the more resistance it faces from larger economies like the America and the European Union. And this isn't going to stop. It's just going to get harder and harder for China. So China needs to figure out a way to grow that's not export, and that's very difficult, and no stimulus package is going to get the job done.
And other challenges include a shrinking population, slowing productivity. I'm just wondering, for the short term, how can the government address these concerns, these challenges?
So in the short run, the government really needs to keep consumer confidence up. And not just consumer confidence. It needs, we say consumer confidence as economists, but in some sense, in China's case, this is really just a short term for keeping citizen confidence up. China needs the Chinese people to maintain its confidence in the Chinese economy, to keep faith that the Chinese economy will keep growing, that, whatever hard times they face now, things will be better tomorrow. And that's going to factor into how much they buy. That's going to factor into how much they save. That's going to factor into how much children they have. And so on some level, some of it is about stimulus and making economic policy. Some of it is just about saying the right things and making people feel like the government understand what they're going through and that they're going to do whatever it takes to help the people, achieve economic prosperity.
And Daniel, in terms of the market perspective, it does seem like the government is saying the right thing. But in terms of stimulus, is the market expecting more?
So I think we can sort of work backwards here. So the question is, if the economy isn't growing fast enough to avoid social unrest, then I think we're going to see the government act, whether it's monetary stimulus or fiscal measures. I think the measures that have been announced so far have, of course, been welcomed by markets, but they've been rather piecemeal, and we haven't seen too much follow through. So I think the fact that markets are strong despite that is a good thing. I think if we were to see the government respond and impart much more stimulus, then I think clearly market would take that very positively.
There's a view out there that given that the Fed is on the cusp of cutting rates, that China would seize an opportunity to actually boost stimulus. Do you see that happening?
I think it's a possibility, just because central banks don't like there to be too wide gaps open up between their policy rates. Now, of course, this depends partly on the domestic situation and partly on the global situation. But I think certainly if it were to be seen that there were global problems that were related to the Fed's decision to cut, then that too obviously would be a catalyst for the Chinese authorities to act.
How much appetite is there, Nancy, for further stimulus by the Chinese government? It's kept its powder dry for some time.
It's hard to say. I mean, they face a tricky dilemma. On the one hand, just as Daniel has just said, a stimulus is a show of good faith to the people that, we're behind you, we're going to help you, we're going to do what it takes to tide you through. And that's very important at this phase, even if the money itself isn't enough to carry the Chinese economy through to the next phase. On the other hand, how long can they keep this going, right? The headwinds that the Chinese economy are facing, like we were saying earlier, it's not just a year, a moment. These are fundamental structural issues that China has to deal with. And the U.S. tariff war is just making it harder. So China really has to balance, these dual purposes when it decides, do we do more stimulus, how much and for how long?
And not to mention the red-hot stock market. There's a lot of angst among Chinese policymakers that, they don't really want to do stimulus right now because they don't want to encourage even more liquidity that could lead to a boom and bust situation in the markets.
The Chinese stock market is volatile, and Chinese policymakers historically have been hesitant to put too much trust in the stock market. Part of that is easily justified. Financial markets in China are relatively new compared to Europe or in the US, and they're volatile. They go up and down as newer financial markets do. And part of that might just be culture or, something else that we don't totally understand. But definitely policymakers in Beijing seem hesitant to put too much faith in the financial markets.
Dan, if you take a longer-term perspective, what would you be buying in China right now?
Oh, that's a good question. I think that there are some themes that are just, widespread around the world. One, of course, is the AI theme, and China is one of the few countries in the world that can really challenge the US in that regard. So I think that remains strong. I think something else we're obviously seeing in China is that, and to what Nancy said earlier, China is trying to diversify economic activity away from being export-led. So I think that part of that naturally means we're going to see greater reliance on services driving economic activity. So I think services-based companies should benefit over the long run, and also anything that's AI-related, which is not just unique to China.
How about consumption plays? Because the government has said it wants to prop up consumption, but it has remained lackluster.
So I think, consumption is something that drives most economies. So it's hard to get a good economic environment without strong consumption. But I think, one of the big challenges for China is structurally that it's got this massive housing sector debt overhang still. And so I think whilst that's in place, it's going to be hard for consumption really to charge ahead. Even, the stimulus will be there to prevent it from declining too rapidly and too aggressively, but I think it's going to be hard for the consumption plays to really charge ahead.
Nancy, we've been talking about how consumption in China has been pretty lackluster, but we're talking about 5% growth, which is way higher than a lot of the developed nations. I mean, are we really looking at muted consumption? Is it the real picture?
I think we shouldn't focus too much on the 5% growth number for a couple of reasons. First is that It's not so. The Chinese government has a lot of resources and a lot of tools in its hands that it can play with, more than most other governments. So if it really wants to hit 5%, it can. And what does that mean for growth next year, the year afterwards? That's unclear, relative to a government that just lets the economy run more on its own. So I think if we're thinking about medium-run growth of the Chinese economy, we shouldn't focus too much on the 5% or the 4% number. And, when it comes to consumption, I think we need to keep in mind that, Daniel's totally right. With the real estate in crisis, it's really hard to see the Chinese spending a lot when they have sunk so much of their money in the real estate sector. But we also have to keep in mind that even without the real estate crisis, the Chinese are very conservative when it comes to consumption. Household savings rates in China historically have been extraordinarily high, 40% on average in some years. This is not a people that spend a lot. They typically save. When things are good, they save because they have the money to save. When things are bad, they're worried about the future and they save even more.
We've been talking about how China needs to move away from its current growth model, but it is addicted to manufacturing, and there are concerns out there of overcapacity. Do you see China expediting, accelerating, the exports of its cheap goods, that we could eventually see the China shock, which we saw in the 1990s?
I think it's hard for anyone to predict the future. But one thing that we see, that we learned from the Trump tariff wars, is the extent that other economies are willing to go to in order to protect their own economies from the flood of Chinese goods. It's not that China's done anything wrong. What China's doing is exactly what the East Asian tigers did before. But the difference is simply that China is huge. No other economy, or even many economies, can absorb all the things that China has to produce. Chinese policymakers are smart. They see this. They understand this. They understand that they can't keep exporting their way into the future. So they're going to have to come up with another path, another set of tools, whether they like it or not.
Dan, I want to take a look at the Chinese yuan. It does seem like China is shifting towards stronger yuan policy. Is that a fair assumption?
I'm not sure I'd agree with that, actually. I think they are not doing anything to prevent the yuan from strengthening at the moment, but I think it's a tool that they could possibly use to try to defray some of the impact of tariffs. And it's one of the things, of course, that will be part of the underlying current of the conversation that's taking place between the US and Chinese negotiators at the moment. That's yet another lever that the Chinese authorities could use. You can imagine the conversation if, there'll be a hint that they would threaten to devalue aggressively unless there's some movement on tariffs. And the larger that the tariffs are, of course, then the greater the incentive to do that. So I'm not sure I'd agree that they are necessarily seeking a strong yuan. It's just something that's happened, but I think actually they could manipulate it the other way if they so desired.
What's the biggest risk to investing in China right now?
I think the biggest risk for China actually is much the same as it is in the rest of the world, which is that the tariff impact, which so far has been relatively muted in most parts of the world, actually it's not that it doesn't exist, it's just that it's been delayed. And so as that picks up pace, particularly for an economy like China's that is so internationally exposed, I think there's this risk that actually we get a confluence of tariff-related events and there's a sharp downward shock. We haven't seen that yet. There are some offsets in the system, but I think that is clearly the biggest risk.
Watch that space.
Indeed.
Nancy Qian from Kellogg School of Management and Daniel Murray of EFG Asset Management. We thank you so much for your insights today. Still ahead this hour, Tesla's board chair tells us nobody other than Elon Musk is capable of leading the company's transition into artificial intelligence and robotics. That conversation coming right up. Keep it here with us. This is Bloomberg. Tesla's chair says Elon Musk is the only leader who is up to the task of leading the company during a transformative period in AI and robotics. Robyn, Denholm told us why and how about Tesla's board came to its agreement with Musk and what he needs to do to earn his $1 trillion compensation package.
Elon put out the Master Plan 4 on the 1st of September, very auspicious day, I think, in terms of putting out the vision for the company for the next decade or more. And AI and autonomous is at the front and centre of that, both in the vehicles but also in our Optimus lineup and what we're doing from a robotics perspective as well. And so having the board's responsibility is to look at who the CEO is for the next period of time. And we believe that Elon is the right CEO for Tesla over this transformative period of time. And our view is he's a generational leader. There aren't any other people out there like Elon who can actually lead the company over this next decade or so. And so once you decide who the leader should be, you need to put in place a compensation package to incent and motivate him to actually deliver against the ambitious goals.
The motivational piece is interesting. In the course of the proxy, as you read it, a negotiation plays out, doesn't it?
Yep.
7 or 8 months. But there were sticking points on both sides. What were they?
Well, obviously, in any discussion around the future of the company, but also the future of an individual in terms of what motivates them, it's very important to understand that. And from a board perspective, from a special committee perspective, as we've outlined in the proxy, we had a very fulsome process. We had more than 10 meetings with Elon in terms of understanding what were his motivations, what does he want to do over this period of time. And having worked with him now, I've been on the board for 11 years, and Kathleen Wilson-Thompson, our other amazing special committee member, has also been working with him for the past 6 or 7 years as well. And so from our perspective, seeing him in the boardroom, but also understanding what motivates him, it's things that other people can't do. It's what the company could do that no other company could do. So those types of things are what are in this plan. And so, as you said in the outset, it is a zero compensation package unless he delivers against pretty ambitious goals for the company.
Ambitious goals that include 20 million vehicles, that include 10 million FSD, that think about 1 million robots and robo-taxis. Robyn, tell us, from your experience with the 2018 pay package, the investor base really wants to understand how structurally this is different.
Yeah, so for us, the framework of the 2018 plan worked very, very effectively. And so this package, this framework that we've put in place for the 2025 proposed compensation package has 12 tranches, 12 market cap goals, where the top goal is $8.5 trillion, and we're just over $1 trillion today. The first milestone on the market cap side is at $2 trillion. So we've got to almost double the size of the company before any of the market cap goals are actually achieved. And then it increases by $500 billion up into the last 2 tranches, where there's $1 trillion jump each time. And then on the operational side, to your point, Caroline, they're very ambitious. We're just over 8 million cars that have been produced and delivered at Tesla. The milestone on the vehicle side is 20 million vehicles. 10 million FSD paid subscription areas. So to me, these are ambitious goals.
Coming up, the Chaudhary Group's managing director on how the unrest in Nepal is impacting business. Nirvana Chaudhary joining us exclusively. This is Bloomberg. Welcome back. You're watching Insight. Here are some stories we're watching. President Trump is pressing a U.S. appeals court to let him fire Federal Reserve Governor Lisa Cook over alleged mortgage fraud. A lower court last week blocked the move. Trump argues Cook offered no explanation for conflicting loan documents, while her lawyer warns removing her would shatter the Fed's independence. The ruling could come as soon as today. The U.S. has expressed regret over the detention of hundreds of South Korean workers. Speaking in Seoul, Deputy Secretary of State Christopher Landau says the workers will face no disadvantage when re-entering the U.S. Over 300 South Korean returned home on Friday on a chartered jet after being swept up in a raid carried out by U.S. immigration officials. And Australia will spend about $8 billion on a new defence hub near Perth to build Navy ships and dock nuclear submarines. Prime Minister Anthony Albanese says the project will create 10,000 jobs and strengthen the AUKUS security pact. It marks the biggest peacetime increase in defence spending in the nation's history as Canberra seeks to shore up Trump administration's support for AUKUS. Nepal's newly appointed interim Prime Minister Sushila Karki has promised to meet the demands of the Gen Z-led protests to end corruption. According to AFP, Karki promised her government wouldn't stay longer than 6 months and set elections for March. The 73-year-old former Chief Justice spoke publicly Sunday for the first time since she was sworn in office last week after her predecessor's resignation. Let's get perspective from a company that's Nepal's largest taxpayer and one of its biggest employers. The Chaudhary Group was directly impacted by the protests, with its factories and family homes vandalized and set ablaze during the protests. Joining us exclusively from Kathmandu is Chaudhary Group Managing Director Nirvana Chaudhary. Nirvana, good to have you with us. We heard from the new Prime Minister urging for calm. Is calm returning to the country?
Thank you, Haslinda. Yes, we've seen over the last 24 hours that, with the armed forces taking charge finally 24 hours ago, we are seeing law and order and people's day-to-day lives getting back. Offices are opening up, roads and traffic is back in motion. So yes, we are seeing that. However, what we are also seeing is that while the Gen Z protests that moved on, in parallel, when they dissolved the parliament, there was also the existing, the party youth groups who are now, in written, they've said that we don't agree on this. We don't agree what the Gen Z movement has done, how they've appointed the new PM, etc. So we are seeing certain signs that, maybe there's going to be another fraction of the current political parties, groups probably getting down on streets. As of today, fingers crossed, things are getting back to normal. People are getting back to work and getting back to their daily lives.
So there's still a fair bit of uncertainty in the situation in the country. We know that the Gen Zs were up in arms protesting against poor governance, corruption, talking about an elitist society. What do you make of the allegations made by the Gen Z?
So what the allegations as well as the frustration made by Gen Z is, I think, to a large extent valid. They have been talking about the corruption and oppression and the country's political instability over the last 10 years. I mean, the Gen Z, from Gen Z's perspective, over the last 25 years itself, we've had close to 22, 23 governments. Last 30 years, we've had close to 27, 28 governments. Our country, a population of 30 million, over 50% of the population is the youth. And out of the youth, 20% of them are currently unemployed. And we've got annually 500,000 youth leaving the country for migrant employment, who are actually funding the country's GDP through money remittance. So, when you see at the top three leaders of different political parties continuously changing seats, and there's no stability in terms of the policies they make. And then obviously through the media, You see a lot of perspective on lavish lifestyles that they and their family lead. That obviously leads down to a lot of frustration of from the youth, who are unemployed, who are seeing the country not really move forward in that degree that they envisage. So the entire protest actually started off on a peaceful transition. They wanted to give a message, and that was triggered by a social media ban that the government was talking about. Now, it wasn't really a ban. I think that's where the narrative got changed a little bit. It was where the government was asking different social media companies like Meta, etc., to just come and register in Nepal. There was a narrative that was a sign of silencing the freedom of speech for the people,
Right.
and that sort of triggered it off. So that's when the protests came
Nirvana,
in.
what can be done? What is being done? The big question is really, what are the billionaires, the businesses doing, helping to do to allay these concerns?
See, the only thing we can do is within Nepal, continue to fuel our businesses, continue to run our businesses, continue to look inward now because of the instability, because of the protest, especially because that there was infiltrated external forces that hijacked the Gen Z's protest and started vandalizing homes, factories, showrooms, everything. Forget about external investor. Even the internal business community are scared of doing anything. Are asking themselves that for what should we do all of this? Is this the price we get for contributing heavily to the economy? Forget about foreign investors. The internal, I think the state of mind for safety is a big concern currently. But obviously getting confident that the current government and the policies become more favorable and there's safety for the private sector. I'm sure, like myself, private sector is going to get back on its feet, rebuild our companies, again, continue the path of helping the economy grow in different avenues and sectors.
Are you planning to hire more locally? We know from your numbers out there that you hire about 50,000 workers. Are there plans to create more jobs? Because right now, when you take a look at the Nepali economy, some 30% is actually remittances. That suggests that there's a lot of jobs internally within the country.
So the remittance that comes in is from the youth migrating to Middle East and Southeast Asia, Malaysia, etc. Right? So that fuels in about $12 to $13 billion of money remittance coming in every year. Within Nepal, there's 20% unemployment. However, organizations like us employ 25, 30,000 people. And we'll continue to grow. We'll continue to look at avenues of employing more people. But like I mentioned, it's going to take time because the foreign investment that a lot of projects that we had in pipeline are already thinking twice in the instability of Nepal. So, we'll have to lead by example. We'll have to move probably twice the more speed that we've been doing. We have to go with twice the more belief that we've been going just to prove that, hey, Nepal is the future. Nepal's got the right regime. Nepal's got the right policies coming in place.
How's the Chaudhary family coping with what's happening? We know that, the family's assets have been burned. We have homes, factories, buildings set ablaze. What's been the extent of the damage? How is the family coping?
See, it's very, very disheartening. We're very sad because not only are the home that our family lives in and I grew up in, but even our ancestral home, our showrooms, our factories. And at this, you see, in a couple of weeks, we've got the main season, the peak season, annual season, where everyone celebrates the main season of Nepal coming. So as a company, we had actually manufactured and stocked goods of almost 3 months because that's when the peak sales happened. And with this looting, with this external group of people who came into our factories when there was no police, there was no army for that 24 hours, and started looting these goods from our motorcycles to our cars in the showroom to our electronic goods. I think it must be worth at least $40-50 million. Our homes, so I mean, you can't put a price to that, Slinda, but it's pretty sad. I mean, I feel sad to even look at all these videos which are just coming all over the news. I mean, my parents are obviously devastated. The house you can actually build, but the home that we've lived in, grown up in, the memories that we have, it's pretty painful to see this. It's very, very painful to see this. And like me, there are many other businessmen, entrepreneurs whose homes have been vandalized for no reason. I mean, what is the reason for this happening? Because we've done more for the country, we've been there for the country when it's needed. It's not fair. And I think the real group of Gen Z and the overall larger population understand it. And they are pouring in messages of sympathy, saying, we are there for you, we'll find the real culprits, we are doing this. But I mean, there's been a huge sense of huge damage. Factories we can rebuild, showrooms we can rebuild. Home is a little sensitive, it gets a little bit personal. And it's pretty sad.
Nirvana, how do you rebuild from this? And is there a need to rebrand?
There's absolutely, from a company's perspective, I mean, absolutely no need to rebrand. Our rebranding is basically you can burn our homes, but you cannot burn our dreams. But from a country's perspective, because of the continuous instability that's been happening, unrest that is happening, one thing or the other happening, we need to prove ourselves. The taste of the pudding lies in eating it. I think the country needs strong leadership, people who know what they're doing in different fields. Prove it to the rest of the world within the country that these are the avenues and economies and sectors that we are able to do well in. And I think only after we see real growth, real prosperity, and now people talking about the opportunity, will be able to make a dent in people's perception, not only within Nepal, but globally as well. I'm talking about mainly investors and tourism, for example, which is about 10% of our GDP. For them to come back, we'll have to work twice the speed now.
Speaking of opportunity, Trump has imposed 10% tariffs on Nepal, which is the lowest among South Asian nations. Is there a sense of how, the Chaudhary group might seize the opportunity?
Haslinda, so the 10% tariff and where Nepal's competitive advantage lies is in mainly sectors like garments. There's a little bit of a pharma industry that is going. So there are a lot of people who are in the garment industry or the pharma or similar businesses where the tariff in neighboring countries are very, very high. They're already looking into it. They're already looking at partnering with few companies within Nepal. We are not in those sectors, and we don't want to be able to take advantage of which we feel is going to be much more for a temporary, unknown time where the tariff situation might just change overnight. We are too focused in our core businesses. Our core businesses of FMCG, financial services, hospitality, auto and telecom are growing organically across. We're also making acquisitions across in other parts of the world. It's Nepal, our own home ground, that we need to fix, which the team within hours of this agitation, of this protest, have already gotten back on its feet. For us, I could see some of our company team during the midst of the fire, they were trying to go in and trying to save just the data center piece, not for the asset, but because we needed to provide the service to the customers. So I think as on today, within 72 hours of this protest, every business of CG is already gotten to a place where we have continued our our business operations.
We know that CG Foods India was planning an IPO. Is that still on track, or is that being derailed by what's happened in Nepal?
I don't think our global aspirations or our IPO plan, especially for CG Foods India, has changed. I think we are pretty much on track. I think the team and our company is as per plan for the IPO.
Nirvana, thank you so much for that. Nirvana Chaudhary, Managing Director at Chaudhary Group, joining us there with the very latest out of Nepal. That's just breaking news right now in the markets. Asia's stock benchmark gaining 0.2%, 0.2% higher. It's trading above its record close. Of course, this coming on the back of expectations of that Fed rate cut expected this week. Still to come, as India's inflation ticks up for the first time in months, we'll assess the impact on the consumer sector with Goldman Sachs. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insights. Let's do a check on Indian markets, which just started trading about 3 minutes ago. Indian stocks have posted the longest stretch of gains since September last year, the rally being fueled by optimism of an earnings recovery following the government's consumption tax cuts. The Nifty up for 8 days, Sensex up for 5 days. In fact, it's just wrapped up the second straight week of gains on Friday. All eyes, of course, on the Fed and its rate decision this week. The Sensex pretty much flat, 81,912 at this point in time. On the economic front, India's inflation accelerated in August for the first time in 10 months. Data out on Friday showed the consumer price index rising by a little over 2% from a year earlier. But economists say it's still low enough to keep the door open for interest rate cuts if economic growth takes a knock. Nimal Gang, Equities, believes recent consumption tax cuts announced by the government will also ease inflation pressures. Let's get perspective from Arnab Mitra, India consumer analyst at Goldman Sachs. Arnab, good to have you with us. Indications so far have been pretty mixed. How are you assessing the situation?
Yeah, thanks for having me on the show. I think if you look at the consumption environment in India, we are quite constructive on it. It actually started almost 6 months back, where we saw this sharp reduction in food inflation, which was running very high for almost 2 years. Before that, of course, we had the COVID effect. There was some lingering effect of COVID in 2023-24, as well as consumers were coming out. And we've seen this significant shift from the government side trying to help consumption revive in India. So we've seen a series of actions starting from state government direct cash transfers to the income tax cut and most recently the GST cut. So our view is that, this is a series of actions, series of tailwinds, which is coming in the sector after a lot of headwinds that were there between 2020 and 2024. And therefore, we are already seeing encouraging signs of demand picking up. In fact, in the June quarter itself, we saw volume growth tick up for almost all FMCG companies, along with reasonable pricing growth, which always is a good sign of underlying recovery. And therefore, our view has been that mass consumption revival is already started, and catalysts like the GST cut will further fuel it and the rate cuts as they land into the market over the next 6 to 12 months. So we are very constructive on the mass consumption revival that we are seeing.
But in terms of segment, which ones are growing, which ones are lagging?
Yeah, so if you look at the broad consumption sector in India, we've had one trend which started from COVID and continued till a year back, which was affluent consumers did extremely well. So we had a report from Goldman Sachs called The Rise of Affluent India, where we highlighted how affluent consumption, which is the top 5% or the top 50 to 60 million consumers, have been doing extremely well. However, the mass consumption has been actually very, very weak. And how this showed up in sectors is really that sectors like jewelry, hotels, travel, which are more affluent consumption, had done very well, but sectors like FMCG had done very badly because they depend a lot more on mass consumption pickup. So where we are more constructive is a revival in FMCG growth, and that's where we are already seeing some signs that it has already started playing out. A lot more of the catalyst to come through, and it will be quite broad-based. I don't think it's like a rising tide which will help all FMCG companies. Of course, some companies are slightly better positioned with their portfolios, with their strategies to deal with the upsurge, but it should help FMCG across the board. So what we expect in the next couple of years is these mass consumption plays like FMCG to start delivering better revenue growth and earnings growth, while the affluent consumption may keep doing well, but there will be no delta change in the affluent consumption, and that's where we believe investors, at least in our conversations with investors, there is reasonable skepticism on the mass consumption revival because of the last 4-5 years having been bad, but that's where we think there could be positive surprise coming in.
But what are the biggest risks to this consumption revival? I mean, we know that India is still in negotiation when it comes to those tariffs from the U.S. Might that be one factor?
If you look at the tariff impact, yes, the current tariffs are impacting certain specific sectors like textiles, gems, and jewelry. However, if you look at the overall employment pool of India, these are very small contributors to the overall employed population of India. So while there will be severe impact on specific cohort of consumers who are employed in these sectors, I do not expect a broad-based consumption impact of the tariffs on India. The much bigger factors, will be the fact that inflation should continue to be low, like it has been low in the last 6 to 7 months. In fact, there's a startling data point that rural wage growth, the real wage growth for the first time is running in mid-single digits. It was literally running at flat to low single digits for the last 4-5 years. The government stimulus will now start flowing in. In fact, the GST cuts haven't even gone into the market as we speak. Even the rate cuts haven't got transmitted as of now in full effect. So we see very little risk from the tariffs because the other tailwinds are a lot stronger. But to your question that what could be the risk to this thesis, I think one of the risks, of course, could be, the agri cycle has also been very good in India. We've had really good agri cycle this season. The monsoons, the winter crop was very good. If there is some weather-related issue which leads to the agri cycle weakening over the next year, that could have some impact. Right. The other impact could be if there is any kind of slowdown in the urban consumption because of lower job creation, which has been a problem for India.
You talked about FMCG companies. They've been making acquisitions. Do you see more deals coming through?
In fact, it's a very important point you raise. We have had this strong view in the last few years, and we've written about it in multiple reports, that we believe white space expansion is a core part of FMCG growth for any company now. Because the penetration levels in many FMCG companies are way higher than it was 10-15 years back. You cannot grow double-digit consistently if you do not go beyond your core. So I do expect a lot more companies to evaluate opportunities, whether it is organic or inorganic. But the broad thrust will be to try to expand beyond your core, look at new opportunities that are emerging. For example, health supplements is a new opportunity. A lot of personal care opportunities are there. A lot of opportunities in packaged foods. And I do expect companies to keep evaluating a lot more than they've in the past.
Thank you, Arnab Mitra, India consumer analyst at Goldman Sachs. Before we go, here's a look at our show tomorrow. We'll be coming to you live from Super Return Asia here in Singapore. AZVC managing partner Jack Selby will be joining us for a wide-ranging conversation on tech, AI, and film, plus a closer look at VC opportunities with Raisewell Ventures founder Jeep Klein. That is it for Insight. Horizons Middle East and Africa is next. This is Bloomberg.